So we're going to look at ACST, Acasti Pharma. It's a biotech company, and basically it was rising a lot. I think based on two reasons. One, it has not met the basic requirement to be on Nasdaq, and that's it should be at least $1. It's not $1. And number two, they're good at managing their costs. And three, they basically that's pretty much it. There's no three. That's the only two things that I think are good about this company. Um, and the reason I'm saying that is because they have a drug, and apparently it didn't meet statistical significance, and they're not submitting it to the FDA for like approval as a new drug approval. Yeah, so this is like I feel like this is a very technical chart. So that being said, I'll get into it. Yeah, their earnings suck too, and yeah. So like I think the best thing about them was like they only lost $6 million as opposed to $20 million this quarter, and I guess that sent the stock skyrocketing. Not skyrocketing, but like from 21 cents to 27 cents. It's pretty much a multi-day runner. I have to admit, it's pretty cool. The day I saw it was the day it had a lot of high points. Okay, so it was a high of the month or whatever you want to call it. Yeah. Okay, so let me run by the best trades. One thing I want to say is, again, is like it's like purely technical. I looked at stock tweets, I looked at SEC filings, I looked at some news. Like I didn't see any news come out like post November 16th. Nothing. I didn't see anything. So I feel like this is very technical. Anyways, let's get on with it. I thought one of the best things you could do, best places to buy is at the opening, and then morning panic, sell at the height of morning panic. And then to recognize whether this is a good stock to buy at opening, two things I usually do is think about is, oops, I had to do that because I didn't want to look at Heiken Ashi. Two things I usually do, I think about volume and I think about support. These are two things that I think are very important when it comes to buying at the opening. And you can see there's support here at 0.2792, and there's support here at 0.2864, so support is rising. And then like, I mean, let's take the biggest support points. So there's support here, it seems, 0.2, actually no, you know what? This support level hits all of these, the bottoms of these candlesticks. So I would say 0.2931, and then versus support of 0.2818. So already you know that support is rising. So that's a good sign that you should buy at opening. That's just my opinion though. Another thing is like, you do want to have, I made this rule up a while ago, and actually you can see it here whether it's being satisfied. You want to have at least like, I looked at like a bunch of charts. I have found that you should have at least 2,000 on each of these bars. You can see that like there isn't 2,000 on a few of them, but I guess for most of them, yes, there is 2,000. Actually, it's kind of like even, but there's still some volume. It's not totally barren, and there's a lot of volume, and this is probably the most important part. It was a runner the day before, so it did have a lot of uptrend, like really nice chart trend for like bullish traders, like rising support, rising resistance, rising support, resistance rises over here, very little pullback. Like these are amazing signs. That's probably why it did pop over here, and then that was December 1st. Okay, so technically, very nice chart. And then I guess one of the biggest reasons to buy here is the fact that support is rising. And another interesting thing is like um, the close of the previous day is very close to the close of the, or sorry, the close, sure, the closing price of the beginning of the regular session. So when that usually happens, there's no gap to fill, you know? So there's no like, for example, if the chart like was I don't know, like jumped over here and then it started going down, then it might fall at opening just because it wants to fill the gap between the previous day and the next one and the next session. So, well, not the next session, the next day. So I found that like these few of these reasons were good made it good factors, good choice. Man, I'm tired. Made it a good choice to buy at opening. And then let's look at some other obvious reasons why you should have bought at opening. Number one is like probably percentage of appreciation. So it goes from rises from zero, roughly zero, to 8%, 9%, 14% within like 5 minutes. So 1, 2, 3, 4, 5, 13% in 5 minutes is not bad. Then it falls and then it rises again. And support is rising. So, yeah, this was a nice morning panic. Another reason, MACD. Let's look at MACD. MACD is above zero. It says this is a good time to buy at 920. It's an uptrend, and this is a good time to buy at 920. Let's see, where's 920? It's right here. So it says the stock is uptrending, but this is one of the best times to buy. Cool. So MACD was above zero. Generally, if you're bullish on a stock, then you want MACD to be above zero, and you want it to stay above zero, just like it probably did throughout the day, most of the day. Actually, maybe not this one, but the previous day, yes. Because look, so it falls under zero over here. Sorry, my charts look very colorful, and my indicators, I should say. Okay, so let's look at some other stuff. I just want to take off the indicator values. Some other reasons to trade. Okay, so volume. Volume is very important. Volume rises like crazy over here, and then all of a sudden it starts to drop, okay? And then, you know, if volume drops significantly, like if there's extended drop in volume, like there is right here, okay? You don't want to be a part of this if you're bullish. You're gonna get, you know, you're gonna get rocked. You're gonna get sucked down into this, whatever, into a lower price. But when you have very little volume, and this is the best example, like, see how there's only two hits on volume. It's actually hitting a shaded spot. I wouldn't have bought in any of these. I would bought at right here, 941. Is that 940? No, it's 938. I would have bought at 938, and I would have bought maybe at here, right? Actually, right here. And the reason I would have bought there is because now we have, like, not only do we have confirmation that volume is rising, we also have more than one bar. So if you have more than one bar, there's more assurance that like volume will keep rising. So I said I wouldn't have bought here. I said I would have bought here. So it was falling over here, and then it starts to rise. This is a risky place to buy. I would say like this is a better place to buy, and the reason for that is, I mean, on average, volume is this level. Then all of a sudden, it starts to beat the average. It starts to go above the like average volume. So right here, and then it rises again, rises even more, but at the same time, volume is falling. And I've said this before recently, that there is such a thing. I believe there's such a thing as um, uh, like bearish divergence between price and volume. Like you can look at here too. Like this is like classic. Okay, there should be. Well, there isn't. That's funny. Okay, so you won't find it all the time. That's really crazy. So like I think classic divergence, bearish divergence, is when the RSI is lower when the price is higher. But that didn't happen here. Actually, price was like the price was high, and the RSI was high while the price was high. So this is actually, you won't find divergence here, in my opinion. And then you have MACD. It's also higher, and this is also higher. But you can see within the bars, within these two bars, you can see that the volume is lower on this one, but it's also higher on this one, but the price has gone higher. So you can look in three ways. You can look for divergence in three ways. I don't know, recently I've been using this volume divergence thing in my head, and it's been working really nicely. So that would actually give you the best selling price. It would, like if you had noticed that. And I would have bought in like, I mean, this is an amazing buy if you're like, not amazing buy, but like if you were like, let's kind of gamble a bit and let's buy at opening, which is kind of a dangerous time to buy. You would have been right, because if you had like factored in the stuff that I talked about, then you would have been good. But if you were kind of like playing it safe and you were like, okay, I don't even know about this, it's like maybe the volume, like the support is hardly rising, we can't even tell. I don't care that it was like had a nice trend the previous day, although these things are important, I guess. Let's say you didn't want to buy it there, and then you saw it rise, you saw it jump, I don't know, 17%. One thing you can think about too is also about squeeze. So let's see if it squeezed. It kind of did squeeze, to be honest. So like this is a squeeze, when the band squeeze. Usually when the band squeeze, there's a big, what's the word? Breakout? Not a breakout. More like, oh shit, I don't even know what the word is. What does it mean? What is it called? What is it called when stock price squeezes and then explodes? I don't know. I don't know the correct term. What the fuck? Short squeeze? Is it just a short squeeze? Sharp price explosion. I guess they do. Do they call it ready to explode? Unusual signs. Jim Cramer. Blah 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 blah. Okay, let's say explode. I don't know. I mean, like, I thought that was a funny way of saying it, but sure. So basically, what I'm trying to say is, yeah, there was a squeeze here, and then with a squeeze, you don't know which way. It's similar to like a pennant. You don't know which way it's gonna break out of the. Oh, maybe that's a better word. Break out of a squeeze. That sounds so much better than explode. Explode sounds a little, I don't know, too sexual or something. Anyways, so if this is breaking out of the squeeze, what I would suggest is you either buy, I've said this in a previous video, you either buy while it's going up, or you buy on like the first or second, in this case, price decrease. So you would have bought here, and then you could have sold there. You would have bought here or here, and you would have sold there. I feel like this is kind of a riskier zone, and you could maybe buy over here. That's like a less riskier zone. And the reason I say that is because breakouts aren't always clear. Sometimes a stock will go up and then just shoot down. You never know. I mean, yeah, so that's my 2 cents on this trade. I won't talk about that trade anymore. So then the reason why this is one of the best buy points is because the price rises after. Obviously, I have hindsight's 2020, but also because support is falling over here, and then resistance is falling over here, and support falls again over there, resistance falls over there again, and then it starts to go really low volume, and then it falls, it breaks down, and then it picks up some, actually support falls again, resistance falls again, but then again, now support starts to rise, and then it goes flat, it goes sideways. So I would say realistically, I wouldn't have bought here, I wouldn't have bought here. Buying here would have been a gamble, and buying here would have been less of a gamble because support is rising. I would have been okay with buying here. I would have possibly bought in here if I were just kind of like betting on the fact that this stock has already fallen so low or waved low enough that there will be an uptrend afterwards. So if you had bought here at, what's the price? Who cares about the price? Let's just talk about the percentage. So if you had bought here at 10% and you had sold here at 20%, you'll make 10% return. Or if you had bought here instead and you bought in at 11% and you'd sold at 20%, you'd make 9%. I feel like this is a much better, safer buy-in point. And what, it's 1% and you get some little bit more clarity of mind. I did a trade like this today and worked out really nice. And it was all because I reviewed SNDL, and I kind of just like, it just kind of hit me. I was like, oh, I recognize this pattern. Like when a stock starts to drop at the very end of a downtrend, that's an amazing time for reversal. And that's what happened. It was so sick. So yeah, so I suggest either here or here are great points to buy. Just don't buy like at the end of the reversal. You want to buy like when it's when it stops falling down. So I think this is probably the best one because support was still falling here and then support rises. So at least that's a bullish sign, and we're looking for a bullish trade. Cool. If you're a bull. If you're not, fuck you. I'm just kidding. Excuse my language. Okay. All right. So one thing to notice over here is that the RSI makes a new low. So RSI over here is 30, and then all RSI over here is 23. In case you're not aware, like RSI lower than 30 is like it's just as rare as seeing RSI over like 80 or 90 or 75 or whatever. Like here, like, and when I say rare, I mean it doesn't happen as often. Like when you see RSI reach like 90, like you should be taking those as like sell signals, and when you see RSI like 10, you probably should be taking those as buy signals. Okay, so why was this a good sell point and not over here? Like obviously, yeah, you could separate it and you could hold on to it, but just for the fact, let's look at EMA 5. Okay. So EMA 5 breaks down over here. So that's pretty awful. So selling would not be too good. Another thing is like EMA breaks up. The price breaks over EMA, especially right here. So it's like, what's the price? I'm kind of sick of looking at percentages. It's like you buy at 0.3352 and you sell at 0.3477. That's probably a crappy trade. I would say like buy below and sell above. So if you had bought below over here, still below, and you had sold way above, as far above as possible, you'd kind of have to recognize this as like a take profit scenario. And another thing is like, I never thought of this until just I like looked at it, but you can see like this actually looks kind of the same but reversed. So if I were to draw a line, like right here, like that. Actually, no, I didn't mean it like that. I meant like like this, a line of best fit. The line of best fit is amazing. Yeah, if I were to draw a line of best fit, you can see that this is kind of like the reverse of this in a weird way. This is just kind of something I'm recognizing right now. What I would say is buy below the line of best fit, and then selling above the line of best fit will get you profit. So 0.33, here's some good points. So 0.3248, 0.33, 0.384, 0.34, and then selling above. So 0.34 roughly, right? Yeah, roughly 0.34, 0.381, so it's higher than this. And then this kind of just touches and bounces off, and then it breaks through the line of best fit, and that's 0.358, so about 0.36. So there isn't much profit here. This is like more of like a scalp kind of thing. Then it falls, and then support is still, it's still like, it's at this level, but it's still higher than it was before. And then it starts to squeeze. You can see the pennant or whatever. I'll show it to you in case you can't see it. Right here. And this is what I wanted to talk about before. I don't think I talked about it, but because in my earlier videos I said that this is how you trade a pennant. I'm like wait for it to break out and then buy it as it's like going up or whatever, or like on the like first bar down or something, because it'll continue to go up. But there's actually a more detailed, better way to trade it, and hopefully this will pick it up. Let's see, favorites, will that pick it up? I think it will. Kind of did. Yes, it kind of did. So there's a sell signal here, so you'd want to sell over here, but then I'm just going to take it off for a second. But then when it hits the bottom of a pennant, this one is a very short one. So to recognize this as a pennant is like very difficult to do, I think. But yeah, this is a good buy point, and then this is a good sell point, and then this is a good buy point, and then this is a good sell point, and then you just wait. And then if it breaks up, you can jump in. If it breaks down, you don't even jump in. And yeah, so I would say like use the buy, like you want to milk the chart, right? So I would say sell over here, buy over here, sell over here, buy over here, and then sell, let's say over here, and then wait, and then regret selling, and then buy in again. Anywhere after the breakout, or on the first bar down, you can also buy there. And another thing is, like, if you buy in here as it's breaking out, you can actually like not be intimidated when the bar starts to fall. I would say after two bars, don't be intimidated. Like, it's gonna rise past. So after it rises past, you can take profit. You can start to take profit. You can sell off. And yeah, is that all of it? No, it's not all of it. This is kind of a crappy trade. I thought this was a crappy trade, and I'll explain why after I just kind of get rid of everything. So this looks bullish, correct? Yes. I'm glad you agree. This looks bearish, okay? Because, yeah, so support is falling, resistance is rising, and then there's a breakout. Crap. There's a breakout. You can see. Basically, I'm just going to show you this. It's so much easier. No, go away. Yeah, that's fine. I feel like I'm showing off my script, but basically what I wanted to say was EMA 5 is it's okay. You know what? I have to admit, EMA 5 is not perfect. Drawing can be better than EMA 5. So this is what I wanted to draw. You can see that the average resistance level is over here. There is some slanted resistance. yes, you can see it with EMA5, but EMA5 will move with the graph, so it's not perfect. I would say that once it breaks out over here, it's a pretty good buy because resistance, it's not smashed, but in terms of slanted resistance, yes, it is being smashed. Turn your head and you look carefully, yeah, the price is going like farther and farther above it because it's slanted, right? Yeah, so that's that. I was trying to like go through the chart. And what I wanted to say was, it's a crappy chart at this point. You wouldn't want to trade here. It's harder to make profit in the downtrend, and then it's a lot easier to make profit in this uptrend. Goes up, falls down, goes down a bit, and then it starts to jump up, and you can buy and then get rid of it when volume is high. Look at this. Oh, this is awesome. Look at the most recent high volume. Look at the most recent high volume over here. I would have been happy to sell right here. And the reason that is because I'm not looking for volume to be exactly the same. I just want it to be roughly around the same. So I would have liked to sell, my rule of thumb is like 85% of this. So I would have been happy with, on this bar, I would have been very happy, which is the highest bar. And yeah, I probably wouldn't have been so happy over here to sell it, but I would have been very happy on the highest bar, which is the best place to sell. Awesome. Next best thing, or not next best thing, but next thing I want to talk about is this big drop. Yes, there's profit to be made here, but like, and honestly, like when you see these kind of graphs, you're going to be like, this is what you're going to see. You're not going to see the rest of the graph. You're just going to see that, oh, wow, support is rising and resistance is rising. So let's get in. So you wait for like a moment to get in, right? And then you see that it's, you see like MACD is about to cross 0. You buy in, 0.3825. You wait, and then you notice that MACD is no longer, like, it's not flying. What's going on? Let's say you sell it because it looks like maybe it's not going to rise. It doesn't. So this is a crappy trade. I mean, like, that's like the result of that whole situation. The reason that is because you don't want, like, this is a more difficult trade. It's harder to trade when resistance is lower than the previous resistance. It's hard to make more profit. So you generally want to be a part of a trade where there's resistance rising after a fall, not falling. There's less money and it's harder. So generally, I shouldn't say it's harder because it's more time, but you know what I mean. So what did I say earlier? I said that this was a good trade because I said this was the last good trade because support is rising and resistance is rising. So this is like I find that like this is a really bullish pattern, and I think this is a good sign that you should be trying to trade in these kind of patterns. So I would have watched it fall, rise again, and then rise again, and then fall, and then it would have had this kind of pennant shape, and then you can trade the breakout. So it breaks out, and then it falls down, and then you're like, oh, that's bad. But then support is higher than the previous support. You could buy in there, and then take the profit on that. And that's literally the best trade. That's what I mean, that's I wouldn't say this is the best trade. It's the most realistic trade in this area for me as a bullish trader. Yeah. What else do I want to talk about? Okay, so if you had bought when RSI was not too low, more like, man, more when there's MACD resistance. So if you have MACD indicator, you'll probably get maybe either 1 or 2 sell signals or buy signals around this area, because you got the signal line and you got the. I'm curious to know like what it would look like. Let's have a look so I can see what everyone else sees. MACD indicator. Check it out. Oh, there's only one signal. That's pretty good. Damn, it's pretty like, that's a solid freaking buy signal, man. Look at that. Right here. Holy smokes. Original MACD is pretty bomb. Damn. Whatever, I'm happy with my own, but this is pretty sweet too. And you can even like expect it because it's going smaller. That's pretty sweet. I like that. That's amazing. You can do a really clean trade by buying here and then selling here. So buying at 0.34 and selling at 0.36. That's not a bad trade either. And you could do that by looking at the what is this called? Histogram. The histogram. When it stops, oh man, not when it stops, but at its highest point of distance between the MACD line and the signal line, that's going to be like a very reliable place to make money. Yep. So you generally won't get the most. Damn, man, that's pretty impressive. Okay, cool. So that was a nice. I think MACD is probably one of the better buy signals for this area. And then you can see that price is rising, volume is falling. Get rid of it. That's divergence. Boom, false. Then what? And then I think I've talked about everything I wanted to talk about. I'm sure there's maybe more to this chart, but like I'm not interested in this. I'm not interested in this. I'm interested in this. That's pretty amazing. I would love to be a part of this trend. Let's see what's going on here. It goes from 0.3 to 0.34. So what is that in percent? That's like what? 10%. I think that's about 10%. Isn't it? It is about 10%. 10.27. So what would make me get into this trade? Well, volume is super light. Oh, that's an interesting thing. So when volume is really light and it's falling, you can buy in and then reap the benefits. I want to know like what level of volume was this? So volume, oops, that was good. Indicator values. So volume here was 729,000, and then you can see here that volume here was 648,000. So that's high volume on the day, and this was, I mean, in this situation, it was buy, I guess, and then it was an immediate sell. But anyways, you have an idea of what high volume is, and I think a good reason to have an idea of what the most recent high volume is because that can determine a good sell signal. It can determine a good buy signal. Usually, I think I'm going to use it as a good sell signal, because if I had bought in anywhere on this graph, on this chart where there's low volume, let's say, and like the price was low, so let's say support is rising and resistance rising a bit, resistance stops rising, falls, and then it goes up a bit, and then it falls again. That's interesting. That is very interesting. It went up, and then it fell. Ouch. See? Like, breakouts are not always so clear-cut. Gotta be careful. Fell a lot. I'm sure there's a lot of people who got out around here. They're like, oh, I hate this chart. Forget this. So then stock price starts to fall. They're selling off. A few people are getting in, selling off. And then it just goes flat. And then, so one thing about stock price going flat is that generally creating a squeeze. That could have been the cause for this rise as well. Either way, this was like an amazing point to buy in at. And then if you really wanted to be more technical about it, draw a line, and make it go against resistance. So it will hit on average the resistance lines. So let's say you have a line here connecting these 4 points because you know what these 4 points are. So then you can just like extend the line and use that as your buy-in point. And then you'll notice that like that's a breakout. So there's a breakout over here. So that's a good time to buy. You could use this kind of technique elsewhere. So like for example, here, let's say you were bullish around over here. Oh man, this is so hard to use. Whatever. Let's see. Okay. Okay, so let's say you were bullish from here to here. Okay? So you're like, you buy in here and you're trying to hold on to the trade, and then it goes really flat, and it jumps up, and then it kind of goes flat again, and then it falls through. When it falls through, you're gonna want to sell like around here. Let's say you sold at regular. Let's say you sold at 0.3185, but you bought in at 0.31 or 0.31, like pretty much exactly at 0.31. It's not. This isn't the point of this. Isn't to like show you like some amazing trade. The point is like to show you how drawing can affect your buy-in and sell-in points, because it can like they're very solid. It really helps with slanted support and slanted resistance, and that's how you can like make a lot of money. What else would I say? Why is this the best buy-in point versus this? Like, take action. I had this rule to take action over here, so I probably would have tried to sell over here, right? You know what? MACD is even better. Actually, you know what? Again, with the whole divergence thing. So, you'd still, I think I talked about it over here, that, oh, it wasn't over here. It was somewhere else. I think it was over here, maybe. So price went up, but volume went down. So you can see over here, where was it? Oops. You can see over here, price is moving up, but volume is not increasing as much. In fact, it's much greater here than it is over here. So you'd want to wait as the price is moving up, volume is falling a bit, and then you'd sell, like you try to sell over here, or even over here is a good point to sell at. But like if you want to bank on the divergence, then I would say that these parts are pretty sweet to sell at. Yeah, I would have really, it would have been a very, 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 very important sign for me that there's divergence there and I want to get rid of it between volume and price. Is there any more? Of course there's more. I'm just curious to see what else is there. Okay. Okay, so there's like morning panic, and that's the last thing I'm gonna talk about. So morning panic ends up at 0.3591, and it opened at 0.32. Let's see. What kind of percent is that? I'm curious. 15%? Oh no, it's less. It's like 12%. That's still really good. 12% is like a pretty good trade. Why would it go up after this? Again, this is like a very technical, it's a very technical chart because there's nothing good about this company. So you're literally using technicals to trade. One thing that's good is it rose the previous day. It did rise. Then it falls really low, but then support keeps rising. Dude, rising support is so important for morning panic. I find that it's very important. I know that, actually, you know what? No, it's true. Rising support is important. Because do you know what that means? Rising support means the end of a downtrend. That's what it means to me. So that's why I think this is kind of reasonable. Another reasonable thing is like when I love this pattern. Like if you have a stock goes up super high and then it starts to fall, and it keeps falling and keeps falling and keeps falling and keeps falling, and then it reaches like kind of a bottom level. That bottom level, it's only going to go up from the bottom. So that's pretty sweet. So you can see that it went up here and it just fell, fell, fell. So at least there's some sort of gap to fill between the lowest fall and the highest point over here. And it does fill up. So that's pretty sweet. That's pretty sick. Would have been like more inclined to sell around this area, but whatever. Wait, actually, let's take a look. High volume is really high. But the best sell point is here. So this is actually very interesting because I might have tried to sell on this bar because this bar is the highest, and I honestly wouldn't have sold. I would have, like, if I were just using this volume rule, this rule of thumb that I came up with, I would have just kept on holding on and waited for like some massive uptrend. So I have to also keep in mind that, like, I feel like MACD is like high priority. If MACD is showing resistance, then it's a really good time to get rid of it. Another thing would be, what else would determine the fact that I want to trade over here, like sell off over here? Another thing is just volume. Like, if volume is positive and then it goes negative and then positive, oh, wait, no, hold on one second. So price fell over here. Okay, so that means just basically like there's resistance. So resistance of MACD and price, I think, are super important for selling. These are two very important points for selling. So like maybe I would hold on to it, and then I would see there's some resistance. So I would try to sell over here or sell over here. So yeah, I think that's all I want to talk about. And I think that's plenty. There's kind of rising support over here. Shit, sorry this is a long video, but like I feel like the more I analyze this stock, the better. Because the more you try to break your theories down, like when I say break, I mean like destroy. If you have something that you want to prove, and that's correct, especially when you do like coding, if you try to put some mistakes in it, then you can make your theory even, or your code even stronger. So if I'm saying like shit like you should buy a stock because the support is rising, but then you go and find a stock where support is rising and you shouldn't have bought it, so that just like reinforces the strength of your theory. So in this case, I mean, like, you can't really tell because volume is so low at many of these points. Like, you can see that none of it passes 2,000 in this big area. There's a lot of action, but it's all downtrend. I think a majority of this chart is under 2,000. Let me find a good chart. What about this? There's a lot under no, there isn't. This is a lot. Many of these are over 2,000. This is definitely above 2,000. That's below. That's kind of above. This is more of a morning panic exercise. So I'm trying to look to see like what's the volume at. And then another really important thing is this rose, right? And then look, it fell over here, jumped up over here, fell over here, moved up over here, and then it's already, this is very interesting. Very, very interesting. Do you guys see what I'm seeing? So basically what I'm seeing is I told you about this morning panic and why it was good. And basically the stock is at 34 cents here, falls all the way down to 30 cents, then it starts to move up, but still not past this high, then it falls down, and then it moves up, passes the high a bit, and then sells off. Now if you look over here, it was at highest 0.3479. It's falling, it's falling, it's falling. It jumps up way higher than this, and then it falls down, falls, and then it's kind of has some like rising support, and then it goes above. It goes above the previous high. So what's left? What's left for the stock to do? Fall. So that was kind of, I'm glad I actually went over that because it's kind of enlightening for me because I never thought of it like that. I always thought it was like volume and rising support. But no, it's actually also where was the stock previously, and like measure it against that. At least in this case, that's true. I'm sure I need to look at more stocks, but anyways, I think I'm done talking about this. It's a very long video, but I thought it was necessary, and I kind of discovered some things like that EMA5 isn't perfect. Drawing can be better. Another thing is like, yeah, volume is a good thing to keep track of, but even more important is resistance and support, and that's of the price and MACD. And volume divergence is also still very important. I find that that theory is still holding strong. And then lastly, the whole morning panic thing. I thought that was cool. And yeah. Hey, you know what? Like, look at this. It's coming from a low, gets higher, and then it just keeps going high. So there's more than one type of morning panic pattern, I guess. Like, shouldn't this have fallen over here, according to what I just went over? Yeah, I guess so. I guess the stock was kind of undervalued. Oh wait, look at that. It did jump up. There's still sort of a high that it has not been reached. So if it were like you're holding, you could sell over here. Okay, I'm gonna stick by my high theory. I think that's cool. I'm done. Peace out. Hope you enjoyed the video and me babbling about this stuff. I didn't talk about rate of change, but I don't think I need to. High-low and GAN, I don't need to talk about that. I think I talked about the most important stuff. So hope you enjoyed. Take care. Till the next video.